Welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. Happy Sunday out there, guys. If you're new to the channel, please hit the like and subscribe button so you can be notified on any future videos or updated content that we are dropping on the channel. And welcome back to all the fellow subscribers as well. Thank you guys for being here. Appreciate the support and the comments and the likes as well. If you're looking to supercharge your investment strategy, guys, you guys are coming to the right place. Today, we're going to be taking a dive into the 50 a week challenge into SCHD. Just a small challenge, adding 50 bucks weekly into this powerful ETF, and we'll show the reasons why this will pay off down the line, 20, 30 years with the dividend growth, and then we'll look at the Roth portfolio as well. So let's go ahead and take a dive into the video. So as you guys can see, this is the Roth portfolio. Here we got it at $12,304.83. It's up 36% the last year. $3,000, $298.02. So we're making some solid gains here in the portfolio. We had a little dip here. I think this was September, August when the market took a dip. But as you can see, the market always recovers and goes forward. As I've said in previous videos, the market is rigged to go higher and higher. You just got to be patient and buy the dips and continue to add on weekly or bi-weekly or however you want to do it. And once again, guys, I am not a financial advisor. So please do your own extensive research on stocks or ETFs or anything regarding investments, just so you make sure your money is being placed in the safest spot. So therefore, I'm not going to be held accountable if you take any losses. But we're going to go ahead and look at SCHD here. As you guys can see, it closed up on Friday at $28.83. I've been adding it in, 50 a week, 100 a week the past couple of weeks here. I think when we first did the split, we split it to be at 167 shares, 168 shares. Now we're up to 176 shares, basically almost 177. Right now, that's at market value at $5,000. It's up 7% right now because I'm continuing to add to it. I'm not waiting for any crazy dips. I'm just going to add and walk away, not even think about it, because that's essentially what you do on long-term investing. You just add and walk away and let the market do its thing, because over time, like I said, the market is rigged to go higher, and SCHD is going to continue to, I think, is going to continue to go higher. I have a conviction that it's going to, eventually return to the $35 range, the $40 range. But right now, under $30, I think this is a sweet spot for you to, have an opportunity to get into this powerful ETF. I know it says here it is 41% of the portfolio, but it essentially is 41% of my Roth, not the entire portfolio, including my brokerage, my 401k that I also include into it as well, and and other growth portfolios that I have here. So as you guys know, SCHD is the index that tracks the high dividend yielding stocks, and the Dow Jones that pays consistent dividends under the fundamental strength relative to their peers based on certain financial ratios that the Schwab team looks for. So the companies that are in here, have a very strong history. Like I said, weather the storm when the market does take a dip here. So like, once again, guys, it's financial services, healthcare, consumer defensive, energy, industrials, consumer cyclical, heavy, not really heavy on tech, communication services, basic materials, utilities. And here are the top, basically, once again, the top 10 of the SCHD. You got Home Depot, Cisco Systems, BlackRock, Bristol Myers, Chevron, Lockheed Martin, Verizon, Pfizer, UPS, and PepsiCo. So here, by me adding $50 a week into the portfolio, that'll essentially means that I would be adding around $2,400 a year into SCHD. Now you may be asking, well, will this ever get to this amount here? Because in 30 years, if I continue to add $2,400 a year with the annual dividend growth rate of 9%, and let's just say we get a 5% stock growth into the stock, SCHD will be a total value of $688,000, and the dividend income would be at $70,000, and I would own a little bit over 5,400 shares total. That's hypothetically saying if it continues to do what it's doing now over time and the next 30 years. Once again, I'm not a financial advisor. I'm not saying this is going to happen. This is all high conviction, hypothetically saying that if it can continue to do the 13% 5-year growth, the 3 year 9% growth, and the last year 3.77% growth, and so on. And as you guys can see here, my yearly income with SCHD currently with my 176 shares is at $172 a year. Every quarter, it pays me $43.10. So that means that every time it pays a dividend quarterly, it's going to give me $43. That money is going to go right back into the stock no matter what the price is. So hopefully the price stays around $30. Therefore, I'm going to be getting a little bit over a share, maybe a share and a half. I'm into it. And then it breaks it down how much you get paid monthly. If this was a monthly ETF, $14, and it pays me 47 cents a day, which may not sound like a lot, but when you, like I said, when you let compound interest do its thing over time, you'll see that, in 30 years, this could be potentially paying me almost a basic salary at a lot of 9 to 5 jobs for literally not doing anything but holding the shares and basically putting in $2,400. Basically, that's $50 a week. So if you do, $50 times 52, that's around $2,600 a year into SCHD. As you can see, once again, $70,000 would be the dividend income that I would be receiving just from SCHD. Once again, this is hypothetical. Probably, who knows if it happens or not. I don't want anyone, thinking like, oh, this you said this is going to happen and it didn't happen. This is all just hypothetical. It could be more, it could be less, but it gives you an idea on how powerful compound interest is and how powerful it is to have a dividend growth ETF such as SCHD in your portfolio. Like I said, who knows what the average salary is going to be in 30 years. We don't know, what will happen in 30 years, all the type of things that are going on in the world. But I do know one thing: you're not going to be wanting to work. Inflation's still going to be around. You're going to be looking for passive income to either pay you to not work. And then also taxes are going to be around too. So, and bills and groceries, like all those things will still be around in 30 years. So why not set yourself up now today, putting in 50 a week into this powerful ETF, and therefore ignoring all the noise and take action today on your financial independency and also your family trajectory as well. Just saying, let's just say hypothetically, you just invest in SCHD all the way up for the next 30 years, putting $2,600 into this fund every single year, and you walk away from it. What if you just wake up 30 years from now? I will be 63 years old, which a lot of people say, oh man, that's old. That's totally fine. I would rather be 63 years old with looking at something potential to this than rather be a 63-year-old saying, oh man, I got to wake up and I have to go to my 9 to 5 and I got to figure it out still. Those are the type of situations where this type of ETF, by taking action today, can help you take off some of that stress as we get older. As we get older, our companies are going to try to find ways to get us out of the door. You're going to want to find a ways to not work. That's totally fine. That's human nature. SCHD could be that way for us. Who knows? Like I said, this is a high conviction, hypothetical investment here that, like I said, I'll be adding 50 a week into this fund every single week, just to make sure that we are on trajectory to on our way to at least some type of financial independency. Well, am I trying to be a millionaire? Who's not trying to be? But I would rather have something better than nothing down the line. And guys, we're going to finish up here on the last slide. This is the actual portfolio that I have in our brokerage account and our Roths. I have VFTNX, which is the Vanguard total stock market social index. It's got a lot of Apple, Microsoft, Nvidia, Eli Lilly, all those Tesla, all those top companies in there. So that's holding about 37% of portfolio. You guys know I love ET, which that's 16%. I have Amazon at 12%, Vici at 11%, SCHD, which we just broke down, only at 10%. I'm looking to get that up to about the 12 to 15% one day. I have Nvidia, Visa, Celsius, EPD, MSTR, MicroStrategy, ASTS, SoundHound. I do have some cash sitting aside from options trading, buying leaps and things of that nature. GM and Tesla, which I think it's like half of a share or something like that. But eventually, I'll be looking to add in a Tesla once the price comes down to a good buying range for me at some point here in the future. That if it even comes down to that range, who knows? I may just start dollar costing averaging into Tesla because I like what they do, and I like Elon, and everything he's doing for the future of EVs and rockets and Starlink and all that stuff. So yeah, this is basically, like I said, this is all of my portfolio here. Like I said, I'm only showing you this because it said earlier that SCHD was 41%, but that was only 41% of the Roth. But SCHD is truly only 10% of my total portfolio. Thank you again for joining me on the $52 a week challenge here on the Investing on a 9 to 5 YouTube channel. Like and subscribe, guys. And if you guys are thinking about doing this challenge, let me know in the comments. Let me know on how much you're planning on putting into SCHD, either weekly, bi-weekly, or heck, even if you want to do $50 a month. Do something today that's going to change the way your family is going to eat and be less stressful in the future. It's your boy, the Dividend Dog, guys. I'll catch you guys in the next video. And as always, I'm out.